Welcome to the Swing Trading with Cycles channel. We're going to do our update on precious metals today, gold, silver, GDX, and we'll also look at some ratios. It is April 10th, 2023. It's a Monday, and this is actually some intraday action. Rare video while the market is open. And we talked about this in previous videos, but for precious metals, you have to realize that so far, September, this area right here that I'm highlighting, is holding as a major low. I mean, just look at this chart. This is your daily chart of gold. You can see we have this kind of double, triple bottom, if you even want to call it that, 8-year cycle low here. And then we had this furious rally up, rallied for 65 days, and then we dropped into a day 83 low. So this whole thing is one big cycle. And if you're new to the channel, definitely want to get yourself familiar. Take a look at the pinned comment. Get a better understanding of cycles. There's a ton of videos, links to videos, playlists in there. So links to different asset classes, but also fundamentals on price action, cycles, etc. So we're now in this new daily cycle, which the first day was March 1st, and we rallied 26 days. And you can see, so again, take a look at that video. Take your time to consume the content. But cycles are measured from swing low to swing low. So from this swing low to this swing low is 83 days. The rally portion lasted 65 days, and the decline lasted about 18 days. So we have a total of 83 days. People always have this question: what is it? What is a typical cycle length for different asset classes? I say be careful going by the typical, quote unquote, typical cycle length, because price action can surprise you. But generally, gold has around a 30-day cycle, 33 days, you want to call it that. Say 33 to 35. We are currently on day 29. The high was day 26. So a very bullish cycle in the sense that it's very right translated as of right now. And since it's already day 29 and our typical cycle is about 30, 33 days, we're probably getting pretty close to a DCL. You can imagine it coming all the way back to this area, 1946. I think that ends up being a screaming buy, most likely. Of course, we'll have to see how price action reacts in real time. But you can see as of today, we're finally pulling back to the 10-day moving average. And just like really tactically here, this big up candle here on the April 4th, that was the day before we made that high on day 26. We're still above the low from that candle. Let me just mark that so you can see it visually. See, we didn't actually break that low yet. And so you would imagine that by the time we get our daily cycle low, we do break down below this low. And if you want to think very tactically, the recapture of that level, so they call it 1977. So let's say we break down below 1977. When we recapture it, moving back to the upside, that could be a trigger for going long, right? Some kind of buy stop. But the expectation here is that we have so let's just say we have a 33-day cycle, right? The other thing we have to keep in mind is that it's CPI week, right? This is our big update before CPI. So that's interesting, right? So if we were to have our low on Wednesday, so that's CPI day, April 12th, that would be a 31-day cycle. And so you could easily see that being your pivot point. Because if anything, with the CPI coming out on Wednesday, you have to think, what other catalyst could there be for, a daily cycle low and then a rebound? So that seems like actually pretty good odds. Let's look at the weekly chart. So the weekly chart, this is currently week 6, and note that this is just an inside week right now. So we made a new high last week, and last week we have a range of 2032 to 1949. So again, that 1950 area is going to be important. We will want to see price hold above that. You can see this line pretty clear here. And equally important, just look at this chart. I hope you can see that this is the current week right here. Look at what the previous weeks have done. So if you count this week as well, we obviously just started trading because it's just Monday, but so far this has all been consolidation of this move here. So this big up candle the week of March 13th, where we opened at 1867 and we closed at 1988. So we made a more than $100 move from open to close. And look how clean that candle is. There's almost no wick. That's rare. And just in general, to see a candle this clean. I mean, there's a tiny little wick, but I mean, my God, this thing opened on the lows and closed on the highs for the most part. And since then, it's consolidated. What I mean by that, now obviously it's made a higher high. It even made a higher high than here, but it was a marginal higher high. So this is all just consolidation in this area. Another way to think about this is that this is your proverbial bull flag. So again, it's week 6. Also notice that all of this consolidation is happening right above the previous weekly cycle high. So look at this high from week 18 right here. Notice all of this consolidation is happening right above that. And again, that high is 1959. Would not be surprised to see price break down below that level, touch that level, gets close to it, and that becomes your reversal point. So really important next couple days as we go into the CPI print. But I am looking up because, again, this is very, like at this point, every day that passes, we're getting more evidence that this was indeed our 8-year cycle low. And then think back, like just zooming out here, where was our previous 8-year cycle low? That's it. Like, and so obviously there was a pretty choppy period here. Like this is not a amazing rally, but then look at this thing here, right? An 8-year cycle. I tweeted about this. An 8 years, like the shortest 8-year cycle rally we've ever had was 34 months. And keep in mind, let's go to the monthly chart now. So it's week 6, so it's still relatively early in the weekly cycle. Let's get rid of that 6 because that is for weeks. Actually, that is the right 6. So this is month 6. Is that right, or is it month 7 now? So if this was our low here on September, so this is month 1, 2, 3, 4, 5, 6, right? So this is actually the start of month 7. So again, I just said the shortest 8-year cycle rally we've ever had was 34 months, and we're here on month 7. That gives you a sense of there could be a lot of upside in terms of time. We'll have to see what that means for price. But again, just look at this clean monthly chart. Let's zoom it back. Let's zoom out to a quarterly chart. And you can see making higher highs on the quarterly chart. We did have a quarterly high closing, like basically all-time high quarterly close last quarter for Q1. All of these are very, very clear signs that September was a major bottom. And we know what levels we need to hold above, the most important thing. So let's switch over to silver and the miners to get a sense of how those things are behaving. We'll do silver first. So silver is a very different count. So gold is on day 29. Silver is on day 20. We did make a high back on day 18, marginally higher than this high here. And it's kind of similar to like that same kind of principle I talked about with gold. You have a big up candle and then consolidation. That's what silver is doing. So 3 days we've been consolidating here. This is essentially a little bull flag here on day 20. However, similar to gold, we're later in the daily cycle, so wouldn't be surprised to see, in this case, structurally speaking, you could easily see us break down below this high, this low here, which is at 23.85. And also notice this blue line is always going to be your 10-period moving average. We're way above that. Gold has checked back to its 10-period moving average. Silver has not yet. And so we expect that's going to happen in the next couple of days. And obviously this one will be impacted by CPI as well. And on the weekly chart, it's week 4 for silver. And I mean, look how clean that move has been. Just all green weeks, reverse symmetry to take out all this downside. Again, this is clearly a chart that's going to want to pull back at some point. Doesn't mean the pullback is starting now, but something that you want to be aware of. And notice, just like gold, we have gone above the previous weekly cycle's high. So silver topped out on week 22 last cycle and bottomed on week 26. We're now above that level. That level is 24.628. So we will want to stay above that in general. And if we break down below it, a recapture of that level could be a buy trigger, some kind of buy stop. But man, look at this chart right here. Week 4 of a weekly cycle. And finally, the monthly chart. Just look, I mean, like it's objective. It's just math. We are now in an uptrend on the monthly chart. It's a very early uptrend, which is obviously actually good. Now, the risk there is it could break down. It could be a fake out. But I mean, look at this thing. We just made a higher low here in March. And now we've got this, we're making higher highs above this cluster of highs here. Very, very bullish. The other thing I would call out, we talked about this in previous video. This candle and this candle, these two candles, so the April plus March candle, they are a compound outside bullish candle of these two, right? Because like notice this candle here, the March candle made a lower low below the February candle, and it looked like it was going to make a higher high, but it ran out of time. And we've now finished the job in April. We talk about that a lot on this channel. That's an important pattern to understand. The outside candle doesn't always, like sometimes the candle just runs out of time and it doesn't become an outside candle, but then you see follow through on that next candle, and that's exactly what we had here. And if we think about the quarterly chart, how are we looking here? My God, look at this dragonfly, whatever you want to call this thing. I think the most important thing to call it is a higher low. This is a low that's higher than what? Which one? This low. Like notice that. So we would, if this uptrend continues, we would expect to see another higher low on the quarterly chart at some point. And clearly we need to get out above this kind of cluster of highs here. That's our next step for silver. Obviously a long time for this quarterly candle to close. It just opened last week, but you want to keep your eye on that to understand how that might be shaping out. And let's move on to GDX, and then we'll look at the ratios really quickly. So GDX, what day are we on, my friends? So GDX had a long cycle just like gold and silver, and so far we've had a high on day 19, and it is day 21. So currently day 21. So a very similar count to silver. So it's moving closer to silver than it is gold. And of course, we want to see the miners start to outperform gold itself. And similar to silver, the miners have not checked back to their 10-period moving average. We expect that will happen at some point. And again, it's all the same pattern. You have this big up candle. At some point, we'll probably check the low of this candle, which will coincide with the 10-day moving average. That's your daily chart. And on your weekly chart, again, CPI is a obvious potential reversal, obvious potential reversal event, if you will. It's day 5 of the weekly cycle, just an inside week here. Again, just open, so a lot to happen, and it's a CPI week. And finally, on the monthly chart, look at this my God, this looks pretty bullish, right? This is your higher low, and now we're making another higher high. We expect you get more of a higher high and another higher low, higher high. That's the pattern, folks. It's not subjective. It's just math. Are we making higher highs? Are we holding higher lows? So far we are. This is your quarterly chart. And you can see this quarterly chart makes it really clear. All of this action is still inside the range of these two quarterly candles. So, which are bearish outside candles of all of this stuff. So really a move back to, wow, a move back to 41.61 will be the real test, which is the high of this candle. Obviously, there's going to be resistance before we get there. And we've had so far 3 green candles in a row for the quarterly. So wouldn't be surprised to get some pullback. You know, maybe this quarterly candle doesn't end up being quite as bullish, but bigger picture, this thing is marching to 41.61, and we'll see how price reacts when it gets there. That's GDX, the miners. Let's look at some ratios now. We'll look at gold versus silver. We'll look at GDX versus GLD. So let's look at gold versus silver first. We want to see this thing start to break down, because when silver is outperforming gold, it's bullish. And so we want to see this thing continue to move lower. So let's start on the daily chart. We talked about how this thing is in daily cycle decline. I mean, look at this move down. Wow. So it rallied for 57 days. And what day are we on right now? So we had a really long rally of 57 days, and we are currently on day 78. If this thing were going to become a left translated cycle, that means we would actually continue to decline for another like 25, 30 trading days. Now, that is the most bullish scenario for precious metals. Unclear if that's what comes to pass. We're going to have to see. But basically, this move is basically taking out this whole move here. And most importantly, we're in weekly cycle decline. So at some point, we're going to get a bounce here. We're going to get a daily cycle low, and we're going to start a little rally on the daily. But you want to be aware of the weekly. Look at this. So we topped out on week 11. So this is week 12, 13, 14, 15. So this is week 16. Just opened the week, and we're already making lower lows on the weekly chart. That is a good sign for precious metals, a bearish sign for this chart. Again, this is just a weekly version of that daily chart we're looking at. You had this furious rally for 56 days, 11 weeks. Now we're essentially threatening to give back most of it, if not all of it. And let's just actually look at what the 50% retracement would be. So we rallied $16.50 points, call it. So the 50% retracement was like somewhere like here. So we're well past that at this point, right? We've now given back 12 out of 16. So like, a good 2/3 of the rally easily, well over the 50% retrace level. So that's important. That is definitely a positive for precious metals. And finally, if we look at the monthly chart of gold to silver, look at this major topping pattern. So we talked about how this, look at these long-term cycles. Again, if you're not familiar with cycles, take a look at that video. Do yourself that favor, get familiar. This rallied for 44 months and then collapsed into a 55-month low. This has now rallied for 19 months. I wrote this in here just to show this was a swing low, and I was like, oh, wait, is price going to go back and retest this? Now it's starting to look like that is not going to happen. To be crystal clear, if you just think about in your mind's eye, what is this thing doing? We had this big rally up, and then we had this move down. And then it's like, oh, are we going to do this? No. It looks like we're going to do something like this, and then that, and then that, and then something like that, right? It's like on pace to take out this low here in this like longer term cycle decline. This was a relatively short decline because it was only, 11 months. This was a really short decline. This was a much longer decline. So we're on pace for something more like this, which would mean silver would rally like crazy. Would be pretty awesome for the precious metals. We'll see if that's what actually comes to pass. And finally, let's look at GDX versus GLD. We want to see this thing rally because that'll tell us that that GDX is outperforming gold, that miners are outperforming gold, and we can see nice higher high on the monthly chart, nice and clean. How does the quarterly look? Yeah, look at that. So very, very similar to the GDX charts, like the absolute chart. But again, this is a ratio chart here. On the daily, what day are we on? If we think about this from a daily cycle lens. So we've had a high on day 19, and this is day 20. So again, very similar count to GDX itself. And so we look at these ratios because they help to keep us honest. When things are a little bit more ambiguous in terms of the price action, we can look at these and say, is this thing confirming the move or giving us evidence that the move might be false, let's say? This is rallying. We've made a higher high above this previous cluster of highs here that caused this decline. And so this is confirming the bull move in precious metals. And if we think about the weekly cycle, this is on week 5. So again, similar to GDX. So all signs point higher for precious metals. Again, we do need to get through a daily cycle low that is due pretty soon. CPI is very, very, very a very good candidate for a turning point. So we'll be watching that closely. But again, you have to remember, surprises will more likely happen to the upside versus the downside because we've likely made a major low in September. And you can see on the monthly chart for this ratio, this is your September low. Look at that. Clean low and then a series of higher lows after it. Looking pretty good here. So that's our update on precious metals. We'll continue to keep you up to date as smaller things happen. I'll put some tweets out, but right now what we need to do is wait for that daily cycle low. And of course, and again, that'll always be signaled by a daily swing low, and then we kind of take it from there. That's the update on precious metals. Thanks for watching.